Well, the dollar is then going to be a byproduct of particular pressures that might be evident on sterling and the euro. So, as you say, I think in the case of the UK, the fear is that this is the atrocities yesterday in Belgium are going to play to the view that we can't have open borders, and so that is something that will play into the opinion polls. But also there is a view that a European Union without Britain is more fragmented and risks deeper fragmentation, and that's why we don't see the euro benefiting. Whereas in past episodes of kind of flight to safety, we have actually seen the euro improve because the euro is now the preeminent funding currency for global risk trade. So, but when it's euro specific or European specific, we don't see that support. But in terms of general dollars, I mean, obviously, if we did see a tremendous escalation of geopolitical concerns, then you would expect safe haven flows to support the yen and the US dollar in particular. But I think, as your previous guest was saying, geopolitics doesn't have the potential to impact markets in the way that it once did. And I think the primary reason for that is that we don't see geopolitics being associated with spikes in oil prices, which really is the differentiation factor between what we've seen in the recent past and what we've seen in past episodes in previous decades.
Okay, all right, so more down to fundamentals and supply and demand. But with regards to cable, though, to sterling, we had one analyst earlier today telling us that the levels to which cable fell overnight, sterling fell overnight, basically is almost fully pricing in a Brexit. Do you agree?
No, I wouldn't agree with that. I think if we did see Brexit, I think we could see cable down below 130 in an otherwise stable US dollar environment. Remembering going back to 2014 when we had the Scottish referendum on possible independence from the rest of the United Kingdom, during the lead up to that, in one period where we had a couple of polls suggesting that Scotland was likely to vote to leave, we did see cable fall over 5 big figures in the space of a week or so. So I think that just shows you the potential, basically, if the market is really gripped by the fear of that vote going in favour of Brexit. And as yet, the opinion polls are not pointing decisively towards that outcome.
Ray, very quickly before I let you go, with regards to help and support for Europe and for the euro, from Mario Draghi here, I'm just curious, the last round when he came out all guns blazing, probably the most aggressive action we've seen, it was also very apparent that he was not as interested in helping through the euro, but more through the credit channel. But with the Brussels attack, is he likely going to be under more pressure to revert or return to helping through the currency, through the euro?
I don't know. I mean, obviously there's a lot of speculation that at the recent G20 meeting there was some sort of a tacit accord that's involved a preparedness, basically, not to do anything that is seen to be talking down the currency. That was interesting, seeing the comments from Glenn Stevens, the RBA governor, last night, that basically said the central bank can have an opinion about market prices and therefore has a right to an opinion about the currency. I don't think so. Obviously, the euro benefited from the ECB apparently calling a line under negative interest rates as such, and the euro is at competitive levels here. Obviously, if as a result of what's happened, we see the eurozone economy deteriorating, then obviously the pressure will be on the ECB to do more. But I think you're right; they want the credit channel to be the primary mechanism for supporting the economy here, rather than the exchange rate.